for more perspective on the Fed's thinking, what the Fed is likely to do, we are joined from Virginia by the former Richmond Fed President, Al Broaddus. He spent more than 30 years at the Fed. Al, thanks so much for joining us.
Nice to be here, Betty. Good morning.
Good morning. And, I know one of the things that you've said, about the dissenters, at the Fed is that, and I asked this as well to Richard Fisher, is that they are getting more and more public attention. And when that happens, how difficult does that make the job for Ben Bernanke when this happens?
Well, the attention has increased, Betty, since the days when I was at the Fed, because the dissents are now announced immediately. They used to be announced with a lag, with a delay, and that's changed. And I think there's no question that probably, at least at the margin, increases the urgency or the importance of getting consensus from the standpoint of the chairman. So I do think it puts a little additional pressure in that regard on him.
Is it a good or a bad thing?
I'm not sure that in the larger scheme of things, Betty, and over time, it makes a lot of difference. Someone like Ben Bernanke is going to do what he feels is right in any event, and any modification is likely to be relatively small. So I don't know that I think it has any lasting impact on the quality of monetary policy. And in general, I favor prompt and timely transparency.
Right.
It's very important for the public and markets to have a clear understanding of where the Fed stands. And obviously with that many people, smart people, you're going to have some disagreement. And I think it's over the long run constructive for the public to understand that.
Well, Al, okay, and transparency I know is also what Bernanke wants as well, more transparency for the Fed. So as we go into the meeting next week, Al, whose side are you on? Are you on the side of the dissenters in terms of where policies should go, or do you agree with Bernanke?
I may have to punt a little bit on that.
No, don't punt, Al. I don't want you to punt.
I think it would be helpful and probably better if the Fed could avoid another round of QE in the near term. I think the betting now is, though, that given the state of the economy, the clear weakness in the economy, and the fact that while there have been obviously week-to-week and quarterly changes in inflation, actual inflation numbers, inflation expectations appear to be stable.
Right.
So in that situation, I think the betting seems to be, and I would buy into this, that there will be some kind of move towards easing at this meeting. I think the most common thing you hear is the prospect of what's sometimes called Operation Twist, where the Fed would try to lengthen the maturity of its portfolio of bonds in the hope that it could lower long-term interest rates and in that way stimulate investment to some extent.
Okay.
So that's the betting, and I have no reason to disagree with that.
Okay, Al, hang on. I want to bring in Megan into this conversation. Megan Hughes, our reporter who's standing by, because I know this is one of the things that you actually said was a good part of President Obama's speech, which was basically giving a tax break to small businesses. That's going to give them an incentive to hire again. And Megan, you say that this also means a $3 million giveaway to some companies like Home Depot and Walmart. How is that?
That's exactly right. Bloomberg Government, Betty, our team of Capitol Hill analysts, took a look specifically at the part of that payroll tax proposal designed to incentivize companies to hire or increase their payrolls. Well, here's what that part of the proposal does. The payroll tax rate, of course, 6.2%. It would be completely eliminated for 2012 for increases in payrolls up to $50 million. So for big companies that would have expanded anyway, that's $3.1 million from the federal government. And if you take a look at companies like, yes, Home Depot and Target, that's easy money. Both of those companies added 4,000 employees between 2010 and 2011. So if they do the same thing in 2012, pay those employees just an average of $12,500, they would hit that $50 million mark and get that holiday. One other criticism from some of the tax groups that we talked to, what employer is going to hire $50 million worth of full-time employees for a $3 million perk? Of course, the concern for the Obama administration, if it made those provisions too narrow, didn't allow all of these companies to get that perk, not enough businesses would participate and hire.
Right, and that would be the point of that. Megan, thank you. Al, let me get your reaction to that. What do you think?
Well, I don't disagree with that. I think that there's an opportunity here to probably to take some actions that spend some taxpayer dollars that don't get much of a return. I think the point that I made in my communication was that at least to some extent it seems to be targeted towards small businesses. That's a good thing in that that's where most of the jobs are created, and sort of at the margin. I think that's a good thing.
Al, okay, and overall, before I let you go, I mean, from that job speech and from what you're seeing out of the policymakers in Washington, are you more optimistic that we may be able to dig ourselves out of this, or what?
Well, I'm optimistic, Betty, that over time our economy is strong enough and dynamic enough, despite all of these headwinds, to pull out of this thing. But I'm more pessimistic than I was, I think, the last time we spoke. Conditions, we had all of these data revisions that showed that the recession was deeper, the climb out is more difficult, the headwinds are stronger. So that's the problem. So I think it's going to take longer. I'm still betting, although with somewhat less confidence now, that we can avoid a double dip. But it's going to be probably a tough time for the next several weeks.
All right, Al, thank you. Al Broaddus, the former Richmond Fed president.